everybody. So we're going to go ahead and get started. My name is Hope Anderson. I'm the COO and Head of Client Success at Digifox. And with me today, I have Nicholas Merten, CEO and founder of Digifox, and also the founder of one of the largest crypto YouTube channels in the world, Theta Dash. Nick today is going to kind of be doing, correct me if I'm wrong, kind of like a live version of Theta Dash today for the webinar. So the content portion is basically just going to be a live Theta Dash video, kind of basically. We're going to go the state of the market, we'll see whether or not crypto is really in a bear market or not. And at the end, we will be doing a live Q&A with myself and Nick, but mostly Nick. So if you guys have any questions for Nick or myself, or in general, just the company, please put them in the Q&A box at the bottom of your screen. It should say Q&A. You can also put anything in the chat if you want to, and chat back and forth, but your questions are not going to get answered unless they get put in the Q&A box. So please put it in the Q&A box, and then we'll get to the Q&A after. You can submit your questions at any time, and they'll be in the queue for later. So the sooner you get the questions in, the faster we'll be able to answer them. And then, yeah, please do any other bantering you want in the chat. Sometimes I'll drop some helpful references in the chat, like links and such that Nick references in accordance to Digifox. But yeah, other than that, everybody just enjoy the talk, and we will just let Nick take it from here.
Awesome, Hope. Thanks so much. And thank you all for joining in for this conversation. I think it's going to be a really exciting one to dive into. As Hope alluded to, we're going to be doing something that we commonly don't do too much here on Digifox, which is trying to kind of break down where we are within the market as we're focusing on getting paid in crypto out to the world and helping people to simplify crypto investing. I think one thing that's always comforting from time to time is to get an idea of where we stand within the market. So I'm going to try to do my best to break it down in as candid of a way as I possibly can, and kind of really answer a broader question of, has the bear market returned? So for those who may not know what a bear market is, typically in traditional markets, a bear market is defined by an over 20% correction or more in an asset class. So for example, if a major stock index like the S&P 500 or the Dow Jones or the NASDAQ generally pulled back 20%, most people would say that the stock market is in a bear market at that point, when stocks generally overall, these weighted indices, are down 20% or more. However, in crypto markets, when we talk about a bear market, we're talking about more severe pullbacks than a mere 20% correction. That's clockwork in crypto. That happens pretty frequently, but at the same time, you not only get more stark corrections throughout bull markets that can be 20, 30% to the downside or more, but you also get really seismic rallies to the upside. So crypto is generally more volatile than other assets. What we're here today to ask is whether or not we're on the cusp of entering into that 80% general downturn in crypto markets, a full-on bear market for crypto. And I'll go ahead and give you guys a bit of a hint. I don't think we're there yet for a bear market. And I do think that even though in the short term, we've got some potentially more downside in price, considering the worst case scenario, what's really nice about the per se worst case scenarios, it's actually going to set up the foundation for prices to continue climbing higher in 2022 and for us to reach new all-time highs, continued surging higher. So let's go ahead and dive into it. Wanted to give a bit of context there. And I want to start by taking a look at the general chart here. So what we're taking a look at, even though it might look a bit confusing depending on if you look at a line chart or a candle chart, what we're analyzing today is Bitcoin's price over the past couple of months here, at least in the chart we're looking at. Bitcoin back at the start of the year here, you can follow the dates down here on the bottom hand part of the screen. Back here in January has had a pretty exciting year, but at the same time, a pretty shaky one as well. Since the start of the year, Bitcoin had trended up all the way from around the mid 2000 to $30,000 range, all the way up to 65K. Making more than a 100% return in just a matter of the first quarter of the year. But afterwards, Bitcoin had gone through a pretty seismic correction, probably the largest, if not one of the largest mid-cycle corrections for Bitcoin in its price history. I think it was the second largest for Bitcoin and the largest for Ethereum, the second largest cryptocurrency back in May. And All the while, this was a very scary period of time. Back on the Data Dash channel, and even here at Digifox, we shared a similar mantra that this wasn't the end all be all for crypto, that this was a mere mid-cycle correction. It's not what people would sometimes misconcept or call a bear market, right? A bear market for crypto, generally speaking, I'll try to visualize that as we step back here, would be where we have generally a blow off top in price, where prices start to really climb exponentially, as they usually do at a cycle peak, not just in Bitcoin markets, but in other markets as well. And then are followed by a dramatic decline and pretty much a year of decline in price before it starts to base out, set the foundation for the next cycle, and continue higher in price, as we've seen time and time again throughout history. Now, since back during the summer after we had based out after the correction, since then we've been generally trending upwards. We've been setting in what is typically found in an uptrend, higher lows, higher highs, where price is starting to showcase us signs of confidence. However, after reaching new all-time highs back here in early November, ever since then, we've been pulling back from around $69,000 down here to $45,000. And all the while over the last 24 hours, we've seen a bit of a bump up here in price. The trend really hasn't shifted just yet. And I want to spend some time to talk about what may be a possibility, even though it's something that most people wouldn't even fathom could happen. Most people didn't fathom that we would be able to rebound after correcting down to $30,000, but we did. So I want to talk about the contrarian point of view, the idea of what may happen, thinking about the worst possible case scenario. All right, so let's go ahead and start at a bird's eye view, viewing things on the longest time frame possible. Some of you may recall from our previous webinars that we've talked about what's known as the expanding cycle theory. There's a lot of people who look at the long-term timeframes of Bitcoin, and they try to get an understanding as to how long a bull market period of time where Bitcoin's price is increasing is going to last, how high it can go, and outside of that as well, how long bear markets generally take. When we talk about the expanding cycles, it's solely focusing on how long we should expect the Bitcoin bull market that we're currently in to be. What's really nice is that even though there's other methods like the 4-year cycle theory and a couple others that have now kind of been disproven to a degree, the expanding cycle theory makes sense. As you're growing the size of a market like cryptocurrencies or Bitcoin more specifically, you're going to have longer cycles and less returns than the time before. Now, why is that? Because to simply put it, it's much easier for an asset like Bitcoin to grow from a $1 million market cap to $100 million, a 100x in valuation, versus going from a $100 million asset all the way up to a $10 billion asset, which is the same multiple. It's a 100x in value, but you require much more higher levels of liquidity or buy side pressure, people coming into the market, new participants, new investors, in order to drive up value, right? It takes much longer to get to that same multiple over time. And in fact, to even exaggerate that even more, it takes even more liquidity to get us from 1 to 100 million. Sorry, apologies. Going from 10 million to 100 million than it does from a million to 100. I'll take it back. Let me try to explain it. Right. So you have generally, if you, it takes more liquidity to go from $1 billion valuation to $10 billion, right? Just mere 10x in valuation than it does for going from a $1 million valuation to 100 million, right? So sorry, I get that mixed up a bit, but you see my point generally that overall, each of these bull markets are requiring more steam and more fuel to the fire in order to really kick off the next wave. And it takes a longer period of time than the one before. What's really interesting about the expanding cycle theory is it's not just saying that each cycle is going to get longer. What it does is it analyzes the 3 previous bull markets that we've had since as far back as when Bitcoin started trading in July of 2010. And it notices a really interesting trend. For those who may not know what we're looking at right now, we're looking at Bitcoin's entire history over more than the last decade. And a really interesting trend that we find as we're taking a look here at the monthly chart. So each of these candles represent a month's worth of Bitcoin's price action. What we find is that each cycle expands by about a year, generally 11 to 13 months from the previous one before it. We can see here, as indicated here within the diagram, that the first bull market from July of 2010 here towards its peak in June of 2011 was an 11-month cycle, the first of its kind. Afterwards, though, and after we had the bear market, a 93% retracement in price from the all-time highs, we then went on to have yet again another explosive bull market. Less percentage gains than the time before, but really not too far off. The big important factor I want to focus on is the 24 months, a 13-month expansion from the previous cycle. Then we go on to having the next bear market, an 87.5% correction from December 2013 down here to January 2015. And afterwards, we enter into our third bull market, a 35-month bull market from bottom to top, or an 11-month expansion from the previous one, right? So we're generally seeing here that each cycle is adding a year from top to bottom for each of these bull markets. And again, in 2017, after December 2017, when we set in our peak right near $20,000, we had another 85% correction, right? Over 80% pullback in the market. That's the general kind of benchmark we utilize for bear markets, is that it's usually an 80% retracement, removing 4/5 of the value of Bitcoin's previous cycle top. Now, if we're to follow history here and meet somewhere in the middle between our average 11 to 13 month expansion, if we add a mere 12 months to the previous cycle, that would put us on a trajectory for us to reach our new cycle highs, whatever they may be, sometime in November of 2022, a 47-month cycle, right? Now, if we go back a couple of weeks, maybe about a month or two ago, if you were to tell people that we weren't going to reach, for example, I'll flip the perspective the other way. If you would have asked most people in the market what they thought the Bitcoin cycle top was going to be and when it was going to happen, they usually tell you a number like 100K or $100,000, $150,000, $200,000. And all the while, those targets are entirely reasonable for Bitcoin, right? They might sound quite high, but they are totally doable for Bitcoin. A lot of them predicted that it was going to happen by this month in December, that it was going to happen in January. The Bitcoin cycle top was going to be a mere weeks away from where we were at the time. Well, I think we can obviously see by now that that's not the case. And in fact, we've been holding a contrarian view that as we're believers in the expanding cycle theory, that we've got a much longer roadmap ahead of us before we're going to be setting in those euphoric cycle peaks, like we've seen each and every time, right? Now, I want to go ahead and still focus on this chart here, right? And I'm going to go ahead and we're not going to focus so much on the bear markets here. I want to go ahead and focus solely on the green boxes from the chart here. And I want to go ahead and I'll actually pull up the chat here just so I can maybe get you guys a little bit engaged here. I'm keen to hear what you all notice about the previous three cycles and how this one might differ here. Notice the lines here on each of these boxes for the cycle, not the dotted lines, but the straight lines here as we go from expanding across the X and Y axis. What's different about this fourth cycle right here versus the previous three? I'd love to hear if you guys can spot the interesting difference between the fourth one and the past three. So go ahead and give you guys a minute here. Nothing to be shy about if you guys want to toss an idea at it and stuff. I'm all ears to it. It's all good. There will be no grading. Eric brought up a really good point here. We also see as well, Crypto Crank as well. So Crypto Crank brought up a good point. Longer cycle with lower gains overall. It's a very fair point, right? We see that with all three of the previous cycles. So that's a good analysis as well. But I'm going to go ahead and give credit to Eric on this one. He mentioned that halfway through, price had broken through the halfway point. And that's exactly what I want to point your attention to. Each of these cycles broke through the midpoint line, the vertical line here, or sorry, excuse me, the horizontal line, my apologies. The horizontal line and the last third or fourth quarter of the cycle. Once you had passed this midline, we saw that in the first cycle, the second cycle, and the third cycle. But look at what we had this time around. Roughly speaking, we crossed through the midpoint line midway through the cycle, the earliest we've ever seen here throughout history. So what does this tell us about this existing cycle that we're in? We're having more exacerbated rallies and corrections. This is true within this entire bull market from what we can see comparative to other cycles. We had one of the fastest rallies out of the accumulation or basically the bottom of the bear market, right? The fastest recovery in price, the second fastest in the history of Bitcoin, which shouldn't be happening as we're going through expanding cycles and expecting diminishing returns with each cycle comparative to the last. And outside of this, well, we've had two brutal mid-cycle corrections already. We had one back here in July, pulling all the way back down during the sell-off across all financial markets when COVID had hit back in March of 2020. And we also had the May correction here, a 35% month-over-month pullback in Bitcoin's price. Pretty brutal stuff. What was overall a 55% correction from the all-time highs at the bottom here. Not typical correction territory that we see in previous bull markets, at least not here than the 2017 or the 2010 to 2011 cycle. So let's go ahead and dive a little bit further into this. I want to dive further into what might potentially happen. So when we take a look back here from the bottom of the bear market, right, when price had pulled down to 3,100, what we noticed following is that, again, we had this really sudden resurgence within 28 trading weeks. As we're taking a look at the weekly chart here, as you can see in the top left, right, these candles represent a week. Between the time frame of mid-December at the bottom of the bear market all the way up towards the summer of 2019, we saw a 345% rally in Bitcoin's price, an insurmountable rally in price. And this is, again, not what you'd usually see in previous cycles. So, for example, I can take a look here. I'm just going to move my Zoom tool here where I can, so I can adjust this back to the standard format. We can go here, for example, and take a look in the previous bear market, right? We're going to pull back here in price and multiple months, actually a full year almost of sideways consolidation, right? Again, price generally went sideways for nearly a year here before it started to trend up and have higher lows and higher highs, a sign of a reversal where we revisit the previous all-time highs and kick off the next cycle, right? We didn't get that for a long period of time, but instead, within a matter of a couple of months, we were already starting to surge back up higher, back to a point we hadn't retested since back in January, just weeks away from the previous all-time high. So, as follows, we had a sharp correction here. Now, generally speaking, I like to give a little bit of leeway here because during this time period, we had a macro event like COVID that completely disoriented and kind of distorted the charts. But what we find here, if we really take a look here from the general short-term peak here, right, to this point here was about a 60% correction in price. You could look at the exacerbated levels that take us to 74 to 75%. But again, I would roughly go ahead and utilize this 60% range, right? Pulling about 3/5 of the value off of Bitcoin from its relative peak here, right? Now, again, this is not a bear market. It's a mid-cycle correction. But again, much starker than the previous ones we saw in the past. But also, we didn't have as stark of rallies before back in the past, right? Now, with our correction here, it also took some time for prices to recover and get back up to that relative high. It took us over 70 weeks, more than an annual year, to be able to get across here on the finish line and continue rallying higher. And I have a feeling that we might be repeating history to a degree. We might be in another mid-cycle correction phase where we need to be able to turn this area into support and break through higher for the next wave of the cycle. Now, some people might say this is crazy. It can't be done, and that prices should start moving higher soon. Now, they could be moving higher soon. We could start to reverse back up and break through this point of resistance and go towards setting in our new cycle top. But if we're going along with the expanding cycle theory, the model that we've just drawn out here as an example, just for perspective's sake, is going in towards setting in a cycle peak sometime in like August of 2022, right? This is just a drawing. It's not meant to tell you guys exactly where I think price is going. But the idea here is as follows, that we would come back down or retest this range or a range close to it, and then we'd slowly start to work our way back up, eventually breaking through. Third time being the charm in this case, the inevitable breakthrough where prices could start to climb higher. so that we're not entering into a bear market, but we're going to have another mid-cycle correction that I think we're currently already going through. So some of you might be asking a really important question. Why is it that this bull market is acting the way that it is? Is it just merely that it's different from the previous cycles, that the market dynamics have changed? Well, it certainly does mean that the market dynamics have changed, because this one differs dramatically from all other cycles for a key reason. In this market, we are not seeing so much people just simply buying Bitcoin like they used to. What in fact we've been seeing is a stripping of liquidity or money that would usually go towards buying Bitcoin normally, as you would through an exchange or maybe through an app like Digifox, and instead going to credit, to leverage, to trading with money that isn't theirs in order to increase their risk in the market. This is generally known as margin or leverage trading. Now, you can do this not only through using real crypto, which is what actually starts to distort the market, but outside of that as well, through derivatives platforms. I'm going to go ahead and tell you all, steer clear of it. It's not something you should get involved in. Most people lose leverage trading. They lose practically all of their investment, right? So I'm not here to incentivize you get engaged with it. We don't offer it at Digifox, and there's good reason we don't. But the point of it is that it's starting to distort the markets. So let's just go ahead and explain this, and we can start to see it visualized in the chart. So around this time, ironically enough, back here in 2019, derivatives platforms and crypto lending platforms became more popular. So platforms like Celsius, Nexo, BlockFi are some of the crypto lending platforms. Some of the derivatives platforms you might have heard about are platforms like Bybit or FTX or BitMEX. These are, or Binance. These are platforms where you can trade on leverage or trade derivatives, right? And increase your risk on your trade. So what does it mean to effectively leverage trade? Let's say, for example, you've got $10,000 and you wanted to buy Bitcoin back here around, let's just rough off the number at $4,000, right? Generally speaking, you'd be able to buy some Bitcoin, right? You'd be able to buy a good portion of Bitcoin, about 2.5 Bitcoin. However, the important thing we need to think about here is what would happen if you were to lock up that Bitcoin with a borrowing platform like Celsius or Nexo, and you borrowed some cash or stable coins, right, dollars, to be able to go out and buy more crypto. Well, that's what those platforms allow you to do. And some people got really greedy with these platforms, and they started taking on more and more leverage or borrowing credit in order to buy more Bitcoin. And as you can guess, the people who had already invested in the market, being able to borrow more money to buy more crypto, drove up the price of the underlying asset. Now, in order to add to this effect, we need to understand that markets are determined by order books, right? So the price of an asset is determined by what buyers and sellers are willing to either pay or sell their asset for, right? So as more people move towards derivatives platforms, which trade on top of the existing spot market, the real market where Bitcoin's price is determined, that removed a lot of liquidity from the order book, making it more thin and easier for buyers to buy through the asks on the order book, basically the prices that sellers were willing to sell their Bitcoin at. It's a big, extensive topic we could dive into on the nitty-gritty details. But the point of the matter is that it leads to more exacerbated rallies, just like it did back here into the summer of 2019. However, though, when the buying stops and enough people start selling, the corrections are much more brutal and more drawn out, because the funny money in this case is no longer there to support the market. And we correct back to where we should be, just like we were back here in March of 2020, around $5,000. That's much more likely where we should have been around that time. And in fact, if we kind of draw a line here, a support line, we can see that with these two lows here, as well as here, we can see that it lines up actually quite nice. There's a reason buyers came in here. That's much more where the fair value of Bitcoin would be at the time, right? So it's an important thing to understand here that leverage and credit is distorting the market. It's leading us, when we break through new relative highs, to have these major rallies, another 370% rally in an even shorter time frame, 24 weeks. But having these long drawn out consolidation periods mixed with corrections and confusion that inevitably allow us to move on towards the next rally as liquidity and credit builds back up in the market. My point in the matter to this is that it's very likely we're going to go through another correction. A lot of people will tell you that Bitcoin going to 100, 150K or 200K is inevitable. And the question I ask for them is, for what reason? What's to make Bitcoin go up in value at this point? There's not a major wave of institutions that are ready to buy into Bitcoin just yet. They may be coming around the corner, but the price action is not incredibly interesting, or they're going to wait to buy back in on a discount. They're not looking to buy at all-time highs. So again, we need to be patient and understand that even though that may come, it's going to take time to get to that point where we get that major institutional surge in price for Bitcoin. And I think it's going to take possibly even longer than what we have outlined here on the chart, right? We want to consider the worst case scenario. Now, we've talked about the expanding cycles here. We've got our rough idea here of our cycle target. Mine personally is around, and I can go ahead and get the chart shaped up here so it's a little bit more clear. My cycle target is $200,000 by November 2022. So I'm not bearish on the market. In the short term, I'm saying to expect a little bit of correction, but I'm really bullish in the long term. I'm optimistic on crypto markets. Now, what are some other telltale signs that we're not in a bear market? With us pulling back to 30K, potentially, a lot of people say, well, at that point, I mean, obviously, we're going to go down even lower. We're going to go down to 20K, 10K. The market's done for. We're in a bear market. If we take a look at the variety of data science models out there that are respected in the space and hold a lot of weight, what's really interesting is that we can see no real sign that we're in a bear market. For example, the stock to flow model, one of the most cited data science models, even though a lot of people have looked at the stock to flow model in disappointment because they feel that we should have broken out sooner off of the stock to flow. If you actually observe the stock to flow model, which takes into account the halving events for Bitcoin, the reduction of new Bitcoin being issued each new block or every 10 minutes into the supply, so the inflation rate is dropping over time, we can see here that it basically this line here, right, the actual stock to flow line, showcases what the fair value of Bitcoin should be over time, where price should generally correlate around. But we see each and every time that there's a breakout here around the time of an increase on the stock to flow model. And with each cycle, we had them earlier and earlier from the first predecessor cycle. So for example, we had a breakout here before we got to the fair value adjustment. We had one over here as well. And we also had one here as well. But each time it got longer and longer and further away from that fair value point. So that it took longer for fair value to be met for Bitcoin. And this makes sense because the halving event is going to have less and less of an effect on Bitcoin's price, because going from, for example, a 10% inflation rate down to 5% is going to have a more dramatic effect than going from a 2% inflation rate to a 1% inflation rate. It's the same a percentage decline, but it's going to have less and less of an effect as you're taking in less percentage amounts in total per decline, right, as effective of the overall supply, right? So again, a little bit of a technical conversation to have, but either way, we should be expecting this peak to happen later on in the flattening of the stock to flow. It's just generally an expectation we should have. So the stock to flow is still showcasing that we're at a discount. We haven't had a blow off top here in the market. So things look pretty good here. Let's take a look at the logarithmic growth curves, right? Generally speaking, this is an analysis of the logarithmic growth curves on Bitcoin's price in the long term, taking into account the logarithmic chart. We can see here that when we get down on the oscillator, this red line here, right, when we revisit down to the lower band, this is usually the time to buy into Bitcoin, historically speaking, or to add in more to your investment in Bitcoin. And vice versa, when we're at the one value on the oscillator, when we're touching this upward line here, and we're away from the midpoint range or down here at 0, this is a time to generally sell, historically speaking. Each 3 of the previous cycles, we've had a top around that one, that level at 1. So far, we only reached 0.7, very, very far away from those previous cycle highs on the oscillator. So I don't think we've seen our cycle peak yet, right? Again, a lot of people start to get worried in the market. They start thinking in the short term, but in the long term, things are still looking like they've got room to go. And we've seen it back before here in previous cycles where we came up like in 2013 to this midpoint range. We pulled back pretty severely here on the oscillator and then started to kick off the cycle later on, right? Again, And this cycle, it's just going to probably take longer than the previous ones. So it looks pretty good here. Now, we can also take a look at the data science model of relative unrealized profit and loss. This gives us an idea using on-chain metrics for Bitcoin to see whether or not there are investors who are generally at certain ranges of unrealized profit where they've made really strong unrealized returns, meaning that they are on paper richer from the Bitcoin they've purchased and they haven't sold it and materialized those profits into fiat currency like dollars or euros. But along with that as well, when we're in capitulation periods, this is when the vast majority of the market is in the red on their position, that they're actually down from when they had purchased their Bitcoin. There's no real way to absolutely know this, but by using on-chain metrics, we can start to get a gauge for where the market stands. And interestingly enough, historically speaking, when you buy within this range, it's generally a good time to buy Bitcoin, and vice versa. When we get up into the greedy phase, and more specifically into the euphoria, this is where things start to look scary. Now, we did get relatively high up here, around 74%, but unlike the previous cycles where we actually crossed into euphoria, we haven't seen this yet in the market, right? And not to mention as well, again, highlighting the point we talked about earlier, whereas in the previous cycles, right, we've only revisited back up to the greed phase so early in the cycle, back here in August of 2012, right? We didn't see this back in 2017. So again, to reflect back on 2013, we're having more exaggerated rallies and corrections than the 2016 and 2017 cycle, right? So big, important talking point. Not to mention, when we did reach these peaks, we saw very stark declines that continued to move lower each and every time without some sideways consolidation, like we've seen here, bouncing between optimism and denial, as well as the greed phase, right? So again, some really interesting points we can keep in mind here that showcase that we're likely not at a cycle peak. The last data science model I want to take a look at is the R-HODL ratio. This is taking in a variety of key metrics here, but generally speaking, it has a lot to do with the realized cap as well as the HODL waves. This is another data science model we can dive into for a later time. Either way, though, you can see like most of the data science models, we can see here when things are over exacerbated, when a cycle peak is nearing. So when we're in this red zone, we should be concerned. And along with that as well, the R-HODL ratio, when we're in the green zone, we should be more optimistic. We should be taking more risk. Well, lo and behold, we have yet to see a significant decline from the top, nor a revisit towards the red zone. So some of these really nice time-tested data science models are showcasing us clearly that we are likely far away from a cycle peak here. This should provide a really good degree of comfort here. And I think that, again, it takes us back towards our kind of analysis here of how to actually view the market and where we stand. This market is different due to the market dynamics that are driving price upwards and downwards. And it differs from those other cycles because of leverage and credit that have started to distort things. We do believe that Bitcoin can continue climbing higher. We believe we are fully in a bull market here, right? And when I say this, it's generally me, right? I don't want to speak on behalf of the Digifox team, right? But I do believe that we are going to be moving higher here over the next coming months into 2022. But sometimes you've got to have some blood in the streets, a correction in price before we start to move higher and see greener days. So that's it for my analysis here, guys. I hope this has been valuable to you guys, and we can go ahead and dive into some questions.
Awesome. Thank you so much, Nick. Really appreciate you taking the time to go through all of that information. We have a couple of questions here. Just wanted to preface, like what Nick said, none of this is financial advice, but we do aim to educate. And at any time Nick does present his opinion, it is Nick's opinion. And just make sure you always do your own research. But to start it off, JC says, "Hey Nick, I've been holding uni since $4, and I know you were very bullish on it. Is it time to rotate into a new sector, perhaps the metaverse or even Bitcoin or ETH?"
Yeah, that's obviously a great question. Of course, I have a bit of bias because I'm invested in Uni or Uniswap, the Uniswap governance token. I'll put it this way. If you're feeling uncertain about investing in Uniswap as a protocol, just like any other altcoin investment, the general principle I follow when I have an investment that I'm not certain of is that if I still like the project, I still hold about half of it in that protocol. And then what I open myself up to is potentially diverting the other half into those other additional investment opportunities or sectors. So if you find yourself conflicted and really looking at some other alternative opportunities that you really like, then it might be good to do a 50-50 split. Put half into new investments and keep 50% within the existing investment. For me personally, I have not sold my uni. I've been continuing to hold it. And I think that the Uniswap protocol and generally DeFi as a whole is going to see a big rebound back in 2022. So as Ethereum scales and as the network has a lot of updates that are going to allow for DeFi protocols to thrive once more and for everyday people to use it, I think that's going to bring more value proposition for Uni as well as many other DeFi tokens. But that's just my personal take.
Awesome, thank you. Anonymous attendee says, hey, Nick, longtime follower here. Would like to hear your opinion on V-Chain, if I said that correctly. V-E.
Yeah. Yeah, you said it perfect. Yeah, V-Chain is, from my understanding, it tackles a couple different areas, but generally speaking, is a blockchain project focused on supply chain and being able to track authenticity of certain goods and goods that are shipped across the globe. They've worked on, design and branding, but all kinds of different sectors now. V-Chain's been around since the last bull market in 2017. On a fundamentals basis, V-Chain might have some really great partnerships and proof of concepts. I will say, though, that overall, I think the price action of V-Chain has been a little bit, not per se disappointing, but it's just at a point where it doesn't interest me too much. And it hasn't been too much in the spotlight of the crypto sector from what I can see. Nothing negative against it. I have no bars against V-Chain as a protocol, and I think that they're doing some cool stuff. But it's really difficult for a lot of these blockchain projects to get into real commercial applications that are used on wide scale. Most of them are early stage proof of concepts and partnerships that inevitably don't lead to major developments. So I don't know too much about VeChain. I can't speak on it too much. But in the nature of me not being able to speak on it too much, I won't give a recommendation to buy or sell it or whether or not I'm bullish or bearish on it. So sorry if that doesn't provide too much value, but I want to keep candid on it if I don't know too much on it.
Awesome. They just wrote back and said, thank you very much.
Awesome. Happy I could help.
Michael says, how will the strengthening of the US dollar affect the growth and or peak of the cycle?
Yeah, this is a really good point. So with growing inflation across the globe, and there's actually one chart here. I'm glad actually I still have my screen up actually. One thing I want to talk about is this question about inflation and how it would affect Bitcoin and other assets. So generally during periods of inflation, whether it happens overnight or over the course of the next year, eventually markets will price in inflation. Assets are adaptive in nature because the buyers who now have more money due to there being inflation in the economy, right? Inflation typically comes with the introduction of new capital and the increase in velocity of currency. With more new money in the system, people want to protect their purchasing power, and they know that having it in a savings account will not work very well. So they turn towards assets that help them to hedge against inflation in the long run because of their finite or limited supply. In the case of Bitcoin, it is a finite supply at 21 million coins. So a good example of this that I want to talk about, right? As you're mentioning, as there is inflation in the economy, a really important thing to think about is that inflation is not always bad when you compare it to the inflation of other currencies. So for example, the dollar inflation has been quite bad as of recent, right? The inflation in the US has been pretty bad. But if you actually look at how the dollar has been performing against other currencies across the globe, you'll actually see over the past couple of months since back here in May, that since back in May, the dollar has actually been gaining against other currencies. This is what's known as the US dollar currency index, or the DXY or DXY. You can find this online, but it basically showcases that the past couple of months, the dollar has generally, as a weighted index, been performing better against other currencies because other currencies across the world are struggling from higher degrees of inflation and distrust and are declining in value more than the dollar. One really good example of this is the Turkish lira. So this is a really crazy chart here. This is the Turkish lira the dollar against the Turkish lira, the native currency of the country of Turkey. And they've been going through a major set of monetary issues due to high rates of inflation, much higher than the United States, where people are lining up for bread. They're not exactly certain if they'll be able to afford basic necessities, goods and services, right? And what we can see here is that over the long term, though, this has been something that's been building up for a long period of time, since as far back here as really back in the early 2010s, right? As the valuation of the Turkish lira really started to diminish. Now, you might be saying, why is the chart going up if it's diminishing? Well, what we're looking at here is the US dollar to the Turkish lira. So to think about this effective rate here of 12.15, which you can see on the chart, this means that for every dollar you have now, you could purchase 12 Turkish liras, whereas back a couple of years ago, and maybe say 2017, you would get 4 Turkish lira, 3.9 Turkish lira per dollar. So it starts to showcase that the dollar is doing much better than other fiat currencies like the Turkish lira. And this is an extreme example, but I do want to showcase here as well that not only would the dollar have been a good protection for you, but if you start to think of Bitcoin in the same way, Bitcoin as an asset really would have set you apart in hyperinflation territory. So for example, we could take here, we're going to go ahead and do the same time frame here from February of 2020 to here where we are. Bitcoin has gained 928% against the Turkish lira. If we go into that same time frame, we're going to go ahead and we'll take it here to the weekly chart, and we'll go ahead and do the same thing here from February of 2020, right? We can see here they've only basically doubled against the Turkish lira by holding dollars. So even with Bitcoin's dramatic volatility, its finite supply sets it up in a better position against not just the dollar, but a variety of fiat currencies across the world, even including the Turkish lira. In a matter of just about 2 years, right, we can see here that the Bitcoin has performed phenomenally well against the Turkish lira, even less than 2 years, a nearly 10x in value and over 900% return in value and price. So this is, again, a really important thing to keep in mind here, and why many people in Turkey, for example, Turkey has some of the largest adoption for cryptocurrencies as they've been going through extended periods of hyperinflation over the past few years. And I think that as hyperinflation knocks on the door of many more countries to come over the next couple of years and decades, Bitcoin and cryptocurrencies as a whole are going to be the asset class that people turn to. And this will push crypto and other assets alike to a multi-trillion-dollar valuation as a new asset class.
Awesome. Daniel, just really quick, says, great analysis and thank you so much. And where is the Santa Claus rally?
I should get a Santa Claus hat. That would be perfect for the webinars.
Yeah, especially this one, you know?
Yeah.
All right, anonymous attendee says, hi, Nick, what are your thoughts on Theta? Thanks.
Theta is, again, another good project in the space that's built some really fundamentally good products. I think one of the advisors or founding members of the team had previously been one of the co-founders of YouTube. I think Theta is really cool. I know a lot of people who are built who are invested in the ecosystem and really like the idea. But generally, for those who may not know, think of it as like a decentralized YouTube slash streaming service. So decentralized YouTube slash Twitch. I'm very much open to the idea that in the future there's going to be decentralized service providers for these, and Theta's got a lot of traction. How it's going to compete with YouTube, I think we're still far away from that, but I do think that it's a very exciting platform nonetheless. Nothing negative to say. I'm not personally invested, but I wouldn't be opposed to it and stuff, because I do think it's a fundamentally used platform and has some potential in the long run.
Something I actually don't know. Do you know how many crypto projects exist?
More than there should be.
Add more and more every day.
Yeah, I mean, well, the thing about crypto is that, you and I hope we could go create a crypto if we want, right? We could create Nick Coin or Hope Coin. I think the world has plenty of cryptos already. But I think that the general number that there is, if you look at coin market cap, which of course includes every crypto pretty much under the sun, there is over, I think back about a month ago, we reached at the 15,000 crypto mark. So like there's been 15,000 registered cryptocurrency tokens. There's probably more out there that we don't even know about. So yeah, too many to count. And that's why we at Digifox, we have a big emphasis when it comes to get paid in crypto, focusing on established cryptocurrencies. Because yeah, you might be able to find that gem that could really make really great returns, but the likelihood is that you're going to be investing in a really speculative project. So we want to give you the really good ones that have time-tested returns and still have room to grow as this asset class continues to expand.
Yeah. Yeah. I don't know. I'm gonna mispronounce this person's name. Prashant says Hopecoin sounds great. Okay, so Crypto Crank says, what's your opinion on ADA and Thor Chain? Sorry.
Yeah, so Thor Chain, from my understanding, is a decentralized exchange protocol that's aiming to bring various layer one assets and stuff, so you could trade Bitcoin and Ethereum and many others. I think the concept is really interesting and noble. I don't know where they stand in the sense of technology and adoption. In the sense of Cardano, I have a bit more of a negative take. Look, at the end of the day, I like Cardano's long-term vision as a protocol, or ADA, which is the native token, or ADA. And as much as I like that long-term vision, it's taken a very long time to get at some very basic elements of what would define decentralized finance. The protocol has routinely taken longer than expected on each and every protocol update, and I'm very much against that. I would say that I'm guilty of this, and I think many people, many of us are at the end of the day, if we admit it or not. But we end up saying that we're going to do something, and it takes much longer. I'm a big believer on, especially on an open source project, to set deadlines that are easily met, and really making sure that when you say you're going to do something, you do it. Cardano is just now finally getting its first automated market maker, similar to Uniswap, effectively on Ethereum. And that took a very long time. And there was a lot of claims that it was going to be easy. It was going to be a cakewalk for Cardano to beat Ethereum. But I think now we're going to really see that this is the time to test it. If the Cardano ecosystem really comes out, I don't care so much about the short-term price action or the dip in price in ADA. I want to see the AMM working well, people using it, fees being dramatically low, settlement being quick. And if Cardano can do this, then it's going to have a shot at competing with Ethereum, just like all the other layer one protocols out there. So I'm not negative on it, but at the same time, I've got my criticisms of Cardano, to be fair. And it's why at Digifox, for example, when it comes to DeFi, we didn't use Cardano. It's just honestly a little bit too slow.
Yeah, that's kind of the goal of crypto then, isn't it? To like make it more accessible and easier and faster and for everyone.
Yeah.
So
exactly.
Cool. So next question from Sayanda. I'm sorry if I mispronounced your name. Hey, Nick, I would like to know your opinion on Chainlink, because I feel like it has a lot of potential, but it has not been doing great in the market.
Yeah, I mean, Chainlink still to this day, we were very early to covering Chainlink. I think we first talked about it at like $1 or $2, and it ended up rallying much higher here within this current cycle that we're in. Now we've had a bit of a pullback. Generally speaking, with Chainlink, it is still by far the largest Oracle provider within the crypto space. And some of you might be wondering, what is an Oracle? Oracles basically solve what is generally known as the Oracle problem within smart contracts and blockchain technology. Let's say, for example, you want to build a DeFi application that relies on tracking information in financial markets or information in the real world. The unfortunate reality is that for a network like Ethereum, all the while it's decentralized and open source, it's a bit siloed. It doesn't really know how to get this data from the real world. And because of that, we need a source of truth that can communicate with these smart contracts. And that's what oracles are. They help to bring in data and price feeds from the real world so that smart contracts can actually utilize that information and basically make necessary adjustments to users' positions and people interacting with these DeFi protocols according to that data, right? And this is a very, very valuable add to the crypto space fundamentally. Whether or not it's going to benefit Chainlink's token price, right, is another question. One important thing that you guys should really know about here, and I talk about it on the channel, even as a fan of something like Chainlink, right, is that when it comes to an asset's price like Bitcoin or Ethereum or Chainlink, its price is solely determined on whether or not on a given day there's more buyers or more sellers. If there are more buyers than sellers, you're going to have a general increase in price, and vice versa. If you have more sellers than buyers, prices are going to start to decline. This goes for all cryptocurrencies, all stocks, gold and silver in the precious metals market, anything you can think about, right? And the reality is with Chainlink is that there's been a continuous introduction of new tokens in the market for the past year, and that's been almost parallel in line with the kind of stagnation of price and the decline, which is why at the moment I hold very little Chainlink compared to what I used to. Understanding those market dynamics and diving into the data science is so important, because once you understand the supply and demand dynamics, if the supply is continuously increasing, meaning the amount of tokens that can be sold, then you're going to need matching demand to be able to keep prices just where they're at. If you can't keep up demand and it's declining, then prices are just going to decline. So that's really what's happening with Chainlink. It's unfortunate to see, but once that starts to change, then my thesis might turn more bullish on it. So.
Awesome. Well, really quick, Crypto Crank has said, "Thank you, Nick, for your candor. It's always really respectful and thoughtful."
Awesome. Thank you, Crypto Crank. I appreciate it.
Mm-hmm.
And thank you as well for your comments earlier and stuff when we were going through the lengthening cycles.
Mm-hmm. Eduardo says, "What are your thoughts on Crypto.com's DeFi wallet and VVS Finance? Celsius also has plans to build their own DeFi platform."
Yeah, look, I can't speak to any specific platform. My biggest thing, though, is that I like seeing more people building DeFi. At Digifox, we're a believer in the idea that the more in the space, the wealth. That's why we partner with Celsius to offer the same savings rates that you can earn within the Digifox app. And with Get Paid in Crypto, that's just going to be a massive tool added on top of Get Paid in Crypto, so you can start to earn a part of your paycheck in the form of crypto, plus earn interest on your assets passively at better rates than what you get at your bank. And look, overall to the actual topic though and stuff, I don't know specifically. I can't see too much on Crypto.com or what Celsius is building behind the scenes for DeFi, but I like seeing more people building. There was one protocol or project that you mentioned, which I don't know about, but I will say that both of them are very well respected companies, and I'm excited to see them building in the DeFi space. So we do hope to re-tap into DeFi as time progresses, as was our original focus at Digifox. But we want to make sure that it's low cost, easy, and accessible for everyday users. And we don't run into the same high network fees that we ran into back during DeFi summer this past year.
Ready for layer 2.
Oh, yeah.
All right. Jeffrey says, "So are you expecting 30K in the near short term or sometime in 2022? Bitcoin right now looks bullish past the 47.6 resistance."
Yeah. So to that point, what you're referring to, just for context, so everyone can understand as well. The idea is that if Bitcoin gets above a certain price range, then at that point it would be bullish, and this idea of Bitcoin going to 30,000 wouldn't happen. Yeah, that's a possibility for sure. And again, as I want to emphasize here, guys, like out of all the opinions that I've had in this market, we were confident when Bitcoin pulled back to 30,000 back earlier this year in May. We were confident it wasn't a bear market. When along with that as well, when we were around the 65K range back in the early part of 2021, we were confident that we might be in for a correction. We've been really accurate actually this year with our predictions, and I've made some wrong calls in the past, hands down, right? But I have to say, what this prediction, this idea of us going to 30,000, I believe is the more likely scenario, but I'm not sticking to my guns that it's absolutely got to happen. Anything can really happen in markets. And if we do get enough bullish price action here in the next couple of days, then we could be in for just establishing a higher low and continuing prices higher to retest the all-time highs. I just don't see the momentum in the market. I don't see the reasoning for it. It's not that you always need a headline or story to match with it, but I don't see the wave of buyers coming in anytime soon to lead prices up there. I think it's going to take a little bit more pain, a little more sell off in the market. And there's an old saying, I alluded to it earlier, about like sometimes you need blood in the streets. The more painful the correction, sometimes the larger the breakout in this case, right? And there's a famous investor quote from Kathy Wood. She's the founder of ARK Investment. They were major investors in Tesla back before the major rally over the past couple of years. And she had a famous saying that the longer the base, the bigger the breakout, meaning that the longer the asset pushes sideways between continuous resistance and support in this kind of channel. And when it breaks out, that's the moment you know that the breakout's going to be big. So I would say, again, this is not a bearish call-in from our end. We think that this is going to set the foundation for Bitcoin to surge even higher and even quicker once we finally revisit all-time highs.
Awesome. Thank you. Eric says, hey, Nick, what's your top 2022 pick outside of the top 10? So like number 11, I think he's meaning.
Yeah. There's a lot of exciting plays out there. So I would say, look, if you're looking for a safe bet to outpace Bitcoin, Ethereum is that bad. It's going to be very difficult to outpace Ethereum in this cycle. There's too many altcoins out there to where they're almost like toppling over one another to try to compete with Ethereum. And due to the fact that there's so much altcoins being created, it's really going to be difficult to get the kind of gains to match with Ethereum and keep up even with Bitcoin as well in the long run. But if I were to give you one altcoin I like, and to be fair, it's one of my larger positions in the market, but I'm a big believer in put your money where your mouth is, right? Which plays do you really like, right? And what are you invested in? One of them is Radix. Radix is one of the few protocols alongside Solana, Avalanche, Cardano, Binance Smart Chain that really has the network effect capacity later down the line and the technology to be able to compete with Ethereum in the long run. And I'm a big Ethereum investor. I love Ethereum. It's one of my larger investment positions, but Radix is one of the few plays I could see doing that. To give you a very quick pitch, they're not only aiming to go about doing consensus and data storage differently than what Ethereum does as a typical smart contract blockchain, but they've also got Scripto, their native programming language, which differs from Solidity, which is the native programming language for Ethereum. This allows for increased developer efficiency. It takes much less code and a much more easier and more digestible language to learn about programming on Radix than it does on Ethereum. And it's going to allow for less hacks to happen, so more heightened security on these applications. So for me, that's very important if you want to build DeFi applications in the long run, to make it easier for developers and more secure than networks like Ethereum. And I think that that's a big reason why I'm really bullish on Radix. But again, I've got a personal investment in there. So again, that's one thing to note there for transparency.
Awesome. Thank you. All right, so a couple more. JC says, thanks for your answer on my other question. One more quick question, kind of relates to what we were just talking about. What do you think the price range of ETH will be if Bitcoin goes to the 3,000 level?
Oh, so if it goes to the $30,000 range, I think what we're actually going to see in the cycles is quite interesting. Now, I would typically tell you that it's going to pull back just as hard as Bitcoin, and that the market would be really like concerned, and that it might not be a good time to stay in altcoins. But in reality, I think what we're seeing this time is something a little bit different. We've been seeing so far that as Bitcoin has pulled back, I think about perhaps maybe 25-30% from its all-time highs, Ethereum has pulled back less than Bitcoin. I think more around the 20-22% range. And this is a really interesting dynamic, that Ethereum is performing well, much better than Bitcoin in a period of fear, because usually during rallies in the market, Ethereum outpaces Bitcoin, and vice versa. When we go through corrections, Ethereum outpaces Bitcoin to the downside. It has a more severe correction, but now we're not seeing that. And if we take a look at altcoin dominance, we can actually see that altcoins are at their highest level in dominance in this cycle, and the highest levels we've seen since as far back as I think it's back since April or May of 2018. So if we're in a bear market, why is altcoin dominance so high? And I think what this showcases is that this correction in Bitcoin is more of a cyclical rotation, if you will, or a transfer of value and liquidity from Bitcoin to Ethereum and more lucrative altcoins that people are interested in that have more potential to the upside and have more fundamental developments going on. Bitcoin is really focused on a store of value narrative. Ethereum has DeFi, NFTs, the metaverse, as well as other layer one protocols out there that are capturing share in those markets. So I think that investor interest is transmitting from Bitcoin to Ethereum and other altcoins. And that's what we're going to see here, is that Ethereum will hold out much better than Bitcoin if we go down to 30,000, to where it might only pull back a couple percentage points from where we're at now and then start to trend up higher.
Okay. Awesome. I'm going to answer this question, or ask this question, because it's a little bit related to it, and then it's probably sounds like a quick answer. And then at that point, unless you have a couple more minutes, we might cut it off now because it's been about an hour. But Lou says, why would I hold Bitcoin now if Ethereum is going to outpace it or outperform?
That's a great question, Lou. So the point we're going off of earlier is that if we're quite confident, according to history, that Ethereum is going to outpace Bitcoin in this cycle. It's just analyzing history from the data that we do have to work with. It's not always true, though. Right? Ethereum could have, a black swan event tomorrow. It could lose 90% of its value, right? There's all types of different things that can happen in crypto. My biggest point to it is that it's always good to have some degree of diversity. Even if you don't want to have exposure to Bitcoin, having it all in Ethereum may not be the right call, which is why with Get Paid in Crypto, we have a big emphasis on allowing you not just to get paid in one crypto, but get paid in 2 cryptocurrencies, 3 cryptocurrencies, and hopefully be able to earn a wide range of cryptocurrencies as a form of payment as we add more and more coins and tokens over time, and maybe even explore the option of having basketed portfolios that are pre-made. So those are some things that I would say to bear in mind, is that even though historically speaking, we expect Ethereum to outpace Bitcoin, it may not happen this time. So holding a little bit of Bitcoin may not hurt. And the cool thing is that, it basically you've got 1 of 3 scenarios. If, you hold, let's say, for example, in all scenarios, you own 50% Bitcoin and 50% Ethereum. If they end up, performing the same in their other cycle, no harm done, right? If it turns out that Bitcoin outpaces Ethereum, you've got that protection there. You've got a little bit of Bitcoin exposure, and you took maybe a little bit of a hit with Ethereum, or vice versa. If Ethereum outperforms and Bitcoin underperforms against Ethereum, then you got one part of your portfolio that underperformed and one that overperformed, right? They generally will cancel each other out, right? Mm-hmm. So I would say having that exposure to both is really good. What it buys you is the diversity, the exposure to various assets.
Mm-hmm. Yeah, I was just thinking about that. One last question, and then unfortunately we're gonna have to end it. It's like midnight where Nick is. Every month Nick stays up super late to do a webinar. But Daniel says, what killer attribute protects Bitcoin from innovators designing something to compete with it, like Ethereum, for example? And would a flippening, is that the word? Flippening event represent a new king crypto?
Okay, so this is a perfect topic to wrap up on. So look, there's 2 reasons there's 3 reasons Bitcoin is highly valuable in the world economy today. It's because it was first come, first serve, right? As the first one in the market, it got the front runner advantage out of all cryptocurrencies. It's the first of its kind. Yeah. The second off is that it's got a finite supply, which is a great monetary policy for price appreciation. It's not per se a deflationary currency, some people promote, but it's a currency with a finite supply. It has diminishing inflation towards a fixed finite supply, 21 million coins. That's great. And the third one is that because it's the first one and because of these attributes, it's got the widest network effect. Mm. Right. So like social medias or other applications that take off and get adoption and have value, it has a lot to do with the network effect. Now, all these 3 things make Bitcoin very valuable, but it doesn't mean that another kid on the block can't catch up. Another crypto can't get those same things. And with a player like Ethereum, we have a serious chance in this cycle, whether it's for a short period of time or for the longer future, to see Ethereum flip Bitcoin. And this is why, again, I'm very bullish on Ethereum for this cycle. Ethereum is enacting 2 major changes. It's moving from proof of work consensus to proof of stake, which is going to decline the amount of new Ethereum that's generated over time, lowering the inflation rate. And then you've also got EIP 1559, which is already active, which means that a portion of the fees that are paid for transactions on the network, so people are paying ETH for transactions to be confirmed, actually effectively gets burnt. It gets sent to an address that no one receives, and it starts to diminish the existing supply on the market. So these two updates on the Ethereum network are going to lower the supply of Ethereum long term, not just lower the inflation rate and have a finite cap, but it will actually make ETH deflationary. Now, that is something we really haven't seen on one of the major protocols in the crypto space. You combine that with Ethereum being the second largest cryptocurrency by network effect and by users, and the wide range of fundamental applications on Ethereum and things you can do in Ethereum versus Bitcoin. The flippening, or where Ethereum is worth more than Bitcoin, not in the sense of its price, but by its valuation as a network or its market cap, it's becoming very, very likely. I think we can see it in this cycle. I think it's very realistic. It's not a big ask with all the things that have been building on Ethereum. Ethereum transmits on average, I think about 2 to 3 times the daily volume of value on its network with the ETH coin, as well as all the ERC20 tokens than Bitcoin. So there's a lot of activity going on Ethereum that could set up the foundation for this to happen and to really upset markets and challenge Bitcoin's place at the throne.
Like Bitcoin, when you people talk about it, or you hear people ask anything about crypto, you talk to your friends who don't know much about crypto in general, they're gonna usually know what Bitcoin is. So it's like the most popular coin to be talked about in the masses. Even if technically Ethereum was the new like king crypto or whatever, do you think that it would also become the more popular one talked about, or is that always going to be Bitcoin just because? I'm sorry, this is my question, but like it was related to the topic, but it's like I don't know, like it's like a kind of a social, like philosophical question, I guess, because it's like, do you think that anyone's ever going to talk about Bitcoin or another coin as much as Bitcoin, because that was the first one, like you mentioned?
No. I'll mention 2 different perspectives. One on the beneficial side of Bitcoin. Many people see Bitcoin as digital gold, and that is a difficult brand to compete with. I know it sounds quite boring to some people, but being the new age digital store of value, it's earned that title to a large degree. But I'll go ahead and give you the entrepreneurial mindset that a lot of Ethereum fans have. Let's just say that no one uses AOL or Yahoo Mail nowadays like they did back in the 1990s.
That is true.
So there's a lot of it's not to say people don't use them. I've had family members.
Not as much though. Google did kind of take over. So
exactly. Yeah, there's new contenders.
So
yeah, and they did it better. They had a better way of building the network effect. So that's I would say if you're a Bitcoin investor and you're solely exposed to Bitcoin, don't be so confident. Don't be so confident in yourself. It's not that it won't appreciate in value, but there might be other assets that may do way better and for fundamental reasons. Yeah, diversity is key. So
cool. All right. Well, this has been a wonderful webinar. Thank you guys all so much for joining for our last webinar of 2021. We'll see you guys all in 2022. If you haven't had a chance to answer your question, we have quite a few questions left that we didn't get to. Feel free to send those into the client success team in-app or at digifox.finance in that chat bubble. And if you ask us a question and say, hey, this is specifically for the Q&A that I didn't get to answer the question, I will personally send those messages to Eugene, who is our social media coordinator / manager, and he'll kind of consolidate all of those, and we'll be able to hopefully answer some of these questions in the future, either in a staged video or in another webinar. Maybe it'll be a topic. So if you want to still ask your question, definitely still send it in, and we'll do our best to answer it in one way or another. But thank you again so much for being with us here, Nick. And we will see you guys all in the new year. Hope everybody has a great Christmas and holiday season and a wonderful new year. And we'll see you guys later in the next webinar.